Hello guys, glad to have you on board again today. It's been a little while since we updated. Also, don't forget that I release weekly updates in TradingView, and this is where I give you kind of the broad market gestion that I do personally. Aside from what's been said into this weekly update, we're going to update in a shorter time frame what are the current motives and look at some other asset classes. So in terms of cryptocurrencies, everything's been said in the weekly update. To sum up the core essentials, nothing happens because we're in so dumb areas. Right in the middle of the dumb zones, the range is freakingly mature, and that means we're not value trading. We're trading prices and we're trading volatility or whatever that is. This is pure and simply chaotic as crazy, and everyone is trying to wrap up their head about that, and it just makes no sense. So understand one thing: value now is above 4,000 or below 2,500, and that's the next areas in which we might want to talk. Until then, well, boy, it is for the dumbs to talk about. It's just a matter of market makers who will deal with short-term liquidity, whether they buy, sell because of derivative, whatever shit that is. So let it play. No volumes in the middle of a mature range in which we've been for a fucking year. So don't underestimate what we are talking about. When we'll get the head out of a 1 year range long range, it isn't going to be pretty. It's going to be volatile, but until then, everyone is excited about the trend or whatever, and this is the problem. Too much excitement. It is going to happen, but as everyone is anticipating it to happen now, well, the market makers play their usual game. They put a stop to it. They just over-liquidify the market, and that creates short-term ranges. And they generally will do this in the stupidest ever prices, meaning that the professionals don't give a fuck about these prices. The pros don't trade. So there are only two people left trading in these areas: the dumb traders and the market makers. And who do you think is going to win that battle? Don't be dumb enough to trade against the market makers, okay? So I've said it over and over again. Take your own patience at duty. In here, it's absolutely necessary. If you need an advice, one that I could give you is that if you cannot sustain letting time pass, then I suggest you think about alternate solutions, like eventually lending solutions like Celsius and Nexos or whatever. These things will help you sustain letting time pass, because time will basically start to reward you. If you get an 8% yearly interest on your cryptos, well, that will help you getting at least a bit of a gain on a day-to-day basis. That can help you sustain these mental pressures or things like that. On the other hand, all of the staking coins, boy, just make it simple, okay? Each and every block, you're taking a bit of money to the block rewards or whatever. So when you stake, you're actually getting day-to-day revenues. If you stake on Cosmos ecosystem or whatever, which is absolutely required because there's inflation otherwise, and remember, this is punitive inflation. If you don't stake, time costs. And if you stake, time gains. So this is really important factor to mention, okay? So if you're staking your goddamn coins, or if you lend them, you are actually making profits by letting time pass. And you have just figured out what the market makers is all about. Market makers make money over time, no matter what prices do. Only the dumb traders who go short-term gambling against the market makers are the ones who could make losses. So understand it that way, and you'll understand that patience in markets is not necessarily a painful thing if you do it right. Okay, so learn how to be patient, or try to find some tips and tricks to help your brain sustain that pressure. Otherwise, because this is not really what matters the most to me, in the crypto sector, we have to talk about Monero, which is reaching the daily resistant context. And as you've seen, the big boy daddies like Ethereum or Bitcoin are damn far away from their resistant context. They're dealing in pretty and interesting prices. Not the case for Monero. Monero is reaching resistant context. It's the only one that I have in my entire portfolio who is actually now looking for resistant trades. So we'll see all about that, but what matters to me is, as always, okay, we're looking at resistant context, that's great, but what does that mean? In which context does this occur? Well, first and foremost, the rest of the market is doing nothing. Look at that. Nothing is impacting Monero right now. It's just doing its own story, and I like that because I've always pleaded for this. Monero has nothing to do with the rest of the market. It has its own story, its own demand, its own utility, and most importantly, its own risks. We've always made it clear, the day Monero will get into the center of the stage, it will take hard hits, because of course the regulator will try to wreck it down. So if you ever have Monero, boy, not in a custody at centralized exchanges or whatever that is, you could be locked out stupidly from your coins. So if you have Monero, this is self-custody only, and that doesn't mean you are a pirate hiding money from the fiscal policies or whatever, okay? Don't try to lie with Monero. Declare them, pay your taxes, do it well. No one can prevent you from holding Moneros. This is the market, okay? You can hold whatever you want. Just make sure that there is not a third party in between you and your Moneros. No centralized exchange storage for Moneros, or you just don't trade that assets. Anyway, in terms of context, what matters to me, and we'll eventually schedule an entire video about Monero because I think it definitely deserves it, now that we're reaching the trend channel on the weekly basis, meaning that this is the speculative area I was trading. You know it because I shared my trade. I bought around the $200 mark for Monero. I said I don't give a fuck about their attempts to break down. This is exactly what they've done the other time during COVID, but still the speculative area, meaning the fucking support, is where you want to buy, and you do not want to anticipate the market to consistently break below supports. That's the stupidest thing to do. If you anticipate the prices to rise and the value to rise as well, more than 90% of time the supports are working. So if you're consistently thinking that the cryptos generally break supports and things like that, so you rather like to wait and buy below those supports, boy, you're going to be left behind for the next 20 years. So don't take that as granted, okay? This is just the anomaly rather than the norm. The market breaking supports to recover them and then surge, well, okay, that's crypto style, but don't get me wrong, these things will not last forever. This is more like the exception rather than the rule. Okay. Anyway, we're validating this support reaction now. This support has brought a bullish fucking signal. So once again, this is pretty solid. So this leads me to believe that we have now significant chance to go look for the resistant context. And oh, look at the 50% line. It's still blue, which means we're still bullish. Okay? So you rather like to be real cautious with this thing, because now there is not a single bit of resistance until we get there. And as this is not a resistant context because it's still bullish, it's going to still rise over time, leading me to believe that, boy, we have that cup and handle I've been talking for now almost years. And we get it. We've got the cup and handle, and it could validate within the next few months. So don't get hyped like, oh, it just said it's going to make a massive lot of money and this thing. And yes, I do target at least $1,200 for Monero in the future, but until then, it's going to be complicated to navigate. Okay, but the fact that we're reaching validation is very interesting to me. So I'll spare that for a specific video on Monero. But once again, lots of things to account for if you want to deal with Monero. It is not a thing to take if you just have a $1,000 portfolio, and it is definitely not something to account for if you do not how to do it well, okay? So experienced crypto traders only, and I would say 50K plus portfolio required to dip a toe into these troubled waters. But definitely an absolutely required asset on every big portfolio. Anyway, aside from cryptos, because like I said, nothing matters in the crypto market now but the Monero reaching validation. That doesn't mean it will surge or whatever from now. It just means the weekly fucking contexts are validated. So I think it's an asset to bear in mind and to look for because it behaves totally different from the others. Okay, aside from crypto then, so the stock market, well, pretty boring as usual. Nothing happens and nothing keeps happening. So it's really crazily stupid. We still have these resistance third range boundary on a bearish manner, meaning that we've reversed inside the context. No signals to risk limit. So there is still a possibility to neutralize that range. Or of course, if this one validates, meaning that we get to the trend channel, then we know that the next speculative area is below these contexts and below the support context. So in my personal opinion, I think this is what we're going to be doing, and that we're going to have to trade along these areas that have been squeezed out recently. I mean, this means we've dealt with these prices very stupidly, and we might want to put some liquidity out there. So I still stand for what I said. I think there are more pain to come in the US stock market, but that doesn't necessarily mean that this will be the case elsewhere. Like areas like Germany have been absolutely hammered like really hammered. And we have reached more than 20% retracement out there, meaning that this is a buy to me, where this is a sell. So there's definitely an arbitrage to make between these two big areas, and I think investors are starting to figure it out. I'll explain deeper into this because, of course, now we're going to have to talk about euro dollar. You remember that. I mean, a few days ago, I told you don't to fall down the cracks of the stupid narratives of the Fed is rising rates and the Europe isn't. So this is a big, big trap. I mean, ECB is doing bullshit. So it is the new carry trade. The euro dollar can go anywhere but lower. Bullshit. I've always said it. The quality of the actual people publishing those things has gone so low over the latest few years that I still really question their utility at all. But still, so these are the narratives. I've always made it clear in ranging context, don't ever fall for the narratives, even though the range in here is crazy mature. We've made more than 4 range boundaries. It always means the same things to me. Anytime there is a narrative and anytime you try to accelerate, this is what these cross signals says. Oh boy, look at what we do, okay? Oh, range boundary, range boundary, range boundary, range boundary, and possibly a range boundary as well. So the same old narrative. When we are on supportive areas, people tend to say we're going to break them. But most of the time, we do not. So let's try to be rational a little once in a while. Isn't it more strategic to just fight against the narrative, putting a stop loss, and eventually being proven wrong? Rather than just falling for the narrative and just trading because of them. It's very dangerous to do this, okay? So you'd rather like to be proven wrong with a strategy rather than following and falling for narratives. So we're in a range. The range is mature. Yes, it's going to break up or down. Whoever knows. I do not. No one knows. So let it play out. In the worst case scenario, you'll take a stop loss. That means you lose 2% capital at best. Oh, no shit, Sherlock, you're not going to die. So don't fear of being proven wrong. Trading is not about being right. Trading is about repeating the same old process over and over again with a risk limitation. Okay, no one is so wrong that it just loses little money on speculative trades, okay? So sooner or later, you can be wrong a few times in a row. You'll always end up being right somewhere. And if you risk limited your trades, you'll always end up with more money than you had in the beginning. And the gains will always compensate the losses. That's what fucking risk management is all about. Okay, so euro dollar is doing some interesting things. Signs of recovery out of this very tricky area. We're terminating a bear cycle, of course. So now I'm really questioning if we're going to succeed building a bullish momentum. So if it ever is the case, that doesn't mean we'll have higher lows, okay? Right now, we still have lower lows and lower highs. So pay attention to this. What I'm paying attention to is now to see how the bullish momentum will fight against. If we succeed breaking this, that's a good sign. That means we're starting to build a bullish momentum. That doesn't mean we'll not have to build a higher low points afterwards, which is very likely, but that will just tell me that once again, there is no bear trade in here. So there is a risk. There's definitely a risk. Nothing is ever for granted, but I'm taking that risk. Okay, so euro dollar, we'll see there are plenty of things that could support that narrative, but I'm not going to dive into this. Okay, another thing that really interests me right now is silver. Because silver has a very, very similar pattern over the shorter term than the crypto market, falling from a big, big range, okay? This was the crashing market of cryptos. Then we break severely, and then, until then, we've been building a massive, massive range, okay? So silver is in that range for much longer now than the cryptos are, because this range started in in August 2020, okay? But still, we were in the same range area. So it is the same context to me, over mature range that has been lasting for more than a year now, much more than 4 range boundaries, and we're dealing right in the middle of the area. This is where we've got moving averages, 50% context, 50% retracements. Everything is neutral in here. So silver, whether you like it or not, I think is the most correlated asset to cryptos. So this is the reason why I'm looking at it, because it could be anticipating the crypto market moves. So just like for cryptos, the value area now are above 28 or below 23. So I'm really paying a lot of attention about what this market is going to be doing, because I think it could be sending a signal before the crypto market. And in that perspective, understand that I've seen a lot of bullshitters talking about the correlation, the mathematical correlation that there is between the NASDAQ and the cryptos. Well, that's great, but once again, they have totally different contexts. context. The NASDAQ is a bubble, as the crypto market is an emerging trend, multi-time frame trend that will literally probably last for 20 years. So we're at the end of something in one end of the stick, and we're at the beginning of something at the other hand. So how the fuck could you ever think that these things will behave the same way? They might have statistical correlation, meaning that the two rise together and fall together on some specific durations, but despite that, this makes no causation. These markets will behave differently because they have absolutely different contexts, which is not the case for silver. Silver may behave exactly different, and you would study the correlation between this and the crypto market and you will find absolutely irrelevant mathematical correlation. Still, in here, the contexts are the same, meaning that causation might definitely be useful out there. And think about that. Do you actually pay real attention to statistical mathematical correlation between two assets to use this as causation in your strategies, or is it making more sense to use context instead? Because that's the true thing. The reality is that mathematical correlations make no real use case in markets trading until and unless there is the same context. Because context do create causations, statistical causation, which is what we do in trading. We take significantly we take extracted versions of the market through indicators or whatever, and when these indicators behave with similar patterns, then we apply contextual trading. We apply patterns that tells us that when these things behave that or that way, that way, then we do this, and this is statistically relevant. This is what risk limitation is all about. How the hell some people ended up letting you believe that a statistical correlation, meaning that one candle tends to behave the same way that the same candle on the other way, but with no amplitude and with no context and without anything else than that, letting you to believe that these assets will behave the same way. I don't understand this. It is absolutely pointless and stupid, but lots of people tend to believe it, that positive statistical correlation means the assets will behave the same way. It's absolutely not true. And I'll make an entire video debunking this bullshit. Okay, despite that, so still waiting for the rest of the market to give us the earnings. Lots of attention around Apple and Microsoft for the same old reason. They weight a shitload into indices, big indices, okay? And these are definitely not the beginning of something. I mean, if you convince yourself that this is going to keep on going that way forever, good luck with that. This is pretty much the end rather than the beginning. Same thing for Apple. Absolutely stupid bullshit. This is not a trend. This is the biggest market bubble ever created, fueled by only buybacks and future beliefs in the fact that Apple may sell cars or metaverses or whatever. They've been spreading bullshit recently, trying to create growth after doing it for 20 years. So congratulations, Apple. You've done a great job, but it is time to let others do it instead. Now, the markets are about cycle. They rotate. The money go from one area to another because that's what markets are meant for. Distributing the money where they can produce the best returns. I don't think Apple is on the verge to produce any more in the future. It's about time the money goes elsewhere. So don't be the dumb one that buys the story when it's ended. Just be the one that prepare for the next story. So as always, I said, don't sell Apple. It's for professionals only, very risky, and I know what I'm doing, and you certainly don't. So don't be dumb enough to try doing this. But understand that if you're putting a cent in Apple, this is absolutely unjustifiable in a risk limitation perspective. It's okay, so that doesn't mean that you need to buy things that go on the opposite direction, things that fall down the cliff or stuff like that. Makes no sense, okay? So anyway, that's a topic for another day. I'm going to keep it that way. See you guys later.